Are you currently in the market to buy a home or looking to sell your existing property? Then you won't want to miss this important information about the 2023 housing crash and its potential impact on the real estate market. In 2023, the housing market might experience a significant downturn, and this event has been dubbed the 2023 housing crash. You might be wondering why this topic is important. Well, the housing market plays a crucial role in the economy, affecting not only homeowners but also renters, lenders, investors, and policymakers. To understand the potential impact of the 2023 housing crash, it's important to look back at the previous housing market crash in 2008. This event led to a global financial crisis and caused millions of people to lose their homes, jobs, and savings. As a result, policymakers and regulators implemented various measures to prevent another housing market crash from occurring. But unfortunately, it looks like the 2023 housing crash could still happen. So it's crucial to understand what is going on and how to prepare yourself for this event. It's no secret that the housing market has experienced an incredible surge in prices over the past few years. From March 2020 to June 2022, the Case-Shiller Index, which measures housing prices in major metropolitan areas across the United States, recorded an astonishing 17.2% increase in home prices. This is the fastest rate of increase in home prices since 1987, and it's been largely driven by low interest rates, a shortage of inventory, and an increase in demand for housing. The low interest rates are due to the Federal Reserve's efforts to stimulate the economy during the pandemic. The idea was to encourage borrowing, and it has worked exceptionally well. The increase in demand for housing is also due to a few factors. Many people have been reevaluating their living situations due to the pandemic, with more people working from home and needing more space. Additionally, with the rise of remote work, many people are no longer tied to living in expensive metropolitan areas and are seeking out more affordable locations. Another factor contributing to the surge in home prices is the shortage of inventory. There simply aren't enough homes to meet the demand, which has caused bidding wars and multiple offers on properties. This has also led to many buyers making offers on homes sight unseen, relying solely on online listings and virtual tours. So we've talked about the current state of the housing market and why it has yet to crash, but now let's look at the evidence that suggests we may be on the brink of another housing depression. In recent months, there has been a decline in home prices for 5 straight months, with a 3.6% drop from the peak. This is significant when compared to historical data, where we can see similar patterns preceding previous housing market crashes. It's important to understand the different phases of a housing market crash to fully grasp the significance of this decline. One of the initial phases is denial, where both private sellers and builders may refuse to believe that there is anything wrong with the market. This can result in a continuation of high prices, even as the market begins to decline. Private sellers may hold on to their properties for too long, refusing to lower their asking price even as demand decreases. Meanwhile, builders may continue to construct new properties, believing that the demand will eventually catch up to supply. However, this can result in an oversupply of properties on the market, which can lead to a further drop in prices. It's important to note that these factors are not always present in every housing market crash, and that there are many other factors that can contribute to a crash as well. However, the recent decline in home prices and the potential for a denial phase to occur should not be overlooked. Now that we've explored the evidence for the start of another housing depression, let's take a closer look at how the new home market is impacting the existing home market. First, it's important to understand that the new home market and the existing home market are interconnected. As builders construct new homes, they compete with the existing homes on the market. This means that the actions of builders can have a significant impact on the existing home market. One recent development in the new home market has been the actions of builders to stimulate demand. Some builders have reduced prices or offered incentives to buyers in order to boost sales. While this has helped the new home market, it can have negative consequences for the existing home market. When builders reduce prices, they create downward pressure on home values in the surrounding area. This is because buyers may choose a new home at a lower price rather than an existing home that is priced higher. Additionally, the incentives offered by builders, such as free upgrades or appliances, can make the new homes more appealing to buyers than existing homes. The slow pace of real estate estate crashes is another factor that should be considered when looking at the effects of the new home market on the existing home market. Real estate crashes tend to occur slowly over a period of several years. This is because there is a delay between when the market begins to decline and when it is reflected in home prices. As a result, the impact of the new home market on the existing home market may not be immediately apparent. It's worth noting that the pace of the last housing market crash was relatively fast. Home prices began to decline in 2006 and reached their lowest point in 2012. This was due in part to the widespread availability of subprime mortgages and other risky lending practices. While the current housing market does not have the same level of risky lending, there are still concerns that the market is overheated and due for a correction. The 2023 housing crash is not just a momentary event that will be quickly forgotten. It has the potential to cause long-term impacts that could affect the economy, society, and individuals for years to come. One of the potential effects is a significant reduction in housing prices, which would lead to a decrease in homeowners' equity and possibly cause more homeowners to become underwater on their mortgages. This decline in housing prices could also lead to a decrease in consumer spending as people become more cautious about their finances and start to save more. This, in turn, could lead to a slowdown in the economy as consumer spending is a significant driver of economic growth. The 2023 housing crash could also have a profound impact on the rental market. As more people are unable to afford homes, they may turn to renting instead, leading to an increase in demand for rental properties. This could result in an increase in rental prices, making it even more difficult for lower-income families to find affordable housing. Furthermore, the crash could lead to a tightening of credit standards, making it more challenging for people to obtain mortgages or other forms of credit. This could further slow down the economy, as it would reduce the amount of available credit and make it more difficult for businesses to obtain financing. One way to prepare for a housing crash is to focus on building financial resilience. This could involve paying down debt, saving more money, and reducing expenses where possible. It could also involve diversifying investments so as not to rely too heavily on any one asset class, such as real estate. Another way to prepare is to stay informed about the state of the housing market in your local area. This means tracking local home prices, sales, and inventory levels, as well as keeping up with any new developments in the market. So, to sum it up, we've talked about the 2023 housing crash and how it could affect a lot of people and the economy. We looked at the current state of the housing market and the evidence that suggests we might be heading into another housing depression. We also talked about how the new home market can affect existing homes and the long-term consequences of the crash. It's really important for you to be informed and ready for whatever might happen because of this housing market crash. You might want to think about refinancing your home, selling it, or even renting it out temporarily until things settle down. Make sure to get your information from trustworthy sources and take action to minimize the negative impact of the crash. Remember, it's always better to be prepared than caught off guard. We really hope you found this video super informative and it got you thinking about the current state of the housing market and the potential for a 2023 housing crash. We would absolutely love to hear your thoughts, so please don't hesitate to drop us a comment down below. Also, if you enjoyed this video, consider subscribing to our channel and hit that like button. And don't forget to turn on notifications so you never miss out on our latest videos. Thanks so much for watching. We can't wait to see you in our next one.